Good afternoon, everyone. Good morning. I'm John Payne. I'm coming to you from our HedgePoint Ag US headquarters here in Chicago. Thank you for joining me as always. We're going to talk about the wheat markets today, specifically what's going on in the Ukraine and Russia in regards to the trade corridor and the weather updates potentially from the Northern Hemisphere wheat and then the Southern Hemisphere wheat as well. So starting quickly with the news that broke over the weekend that Russia was no longer comfortable or looking to move forward with an extension of the grain corridor, which allowed excess supply from the Ukraine to flow out of the Black Sea through Turkey and basically enter the world market that way. So Russia was essentially giving permission to the UN to broker deals with governments who need the supply and have it moved from the Ukraine, from the port of Odessa, out through the Turkish canals that would enter the Mediterranean and then go globally to where it needs to be. The Australians who are growing their crop right now in wheat, they'll be called upon to deliver to Asia and potentially Argentina as well, although Argentina is having a very difficult time with its wheat growing season. So looking at some potential weather disruptions there and some shortfalls. So the U.S. is setting up for what could be a good year, but even at the high prices we have, we're not seeing, in my opinion, a whole lot of wheat production shift out of the summer row crops into wheat in the areas that need to grow it. Just too much competition there. And then we have weather problems here in the Northern Hemisphere as well, with a start to the growing season that is very, very poor in Kansas. So Kansas is the hard red wheat kind of capital of the United States for winter wheat. We have spring wheat, which is grown up north in Minneapolis markets, and then the Canadian markets. We also have Matif, which is the European wheat markets. And then we have Chicago, which kind of represents more of the eastern wheat, soft wheat, and that tends to get more speculative open interest. So as we enter the critical growing season for wheat, we have now a problem in the Black Sea that if you notice the chart that we posted, you'll see the prices have fallen quite a bit as we open the grain corridor. So prices were, we'll call it $10, $12, $13 wheat, depending on the market. And now we've seen everything fall back down into the $8, $9, $10 market range as we've seen wheat being able to flow out of the Black Sea. Corn is a factor as well, as we've seen supplies alleviated or at least come out of that area that needs to meet global markets in Asia. So now as we move forward without those there, what prices are needed to stimulate demand, what prices or supply rather, and what prices are needed to ration demand. And I would argue we aren't at those levels yet, based off of what we're seeing out of the North African buyers. So that's kind of it for the wheat markets here. There's a lot of dynamics at play, a lot of things that we can talk about if you want to call a specialist here, and we can talk about how to play it. So if you have any questions, give us a shout. Thanks a lot and have a great day.